The JP margin call default has been confirmed. It was JPMorgan that missed its margin call on silver commodities. I guess the first thing I should explain to people is that there is a difference between paper silver and actual silver. The trading of paper futures in various commodities has gotten out of control and resulted in an entire derivatives market that, among the big bank players, affects virtually everything on the planet. And most importantly, pension funds are a specially protected class of obligations in a bankruptcy. If a company goes bankrupt, the pension funds take a top-level position in the bankruptcy hierarchy of creditors so that people don't lose their retirements. And then the state does not get those people on its rolls. Actually, they should be enjoying their retirement, which was guaranteed to them by a franchise corporation, right? So pension funds have a protected position in any kind of bankruptcy liquidation sort of situation. And for that reason, they have a preferred status in terms of rattling money. You often see things associated with management of corporate pension funds that are kind of bizarre and weird and really shouldn't be allowed, that the managers today are taking money out and accepting funding for pensions that won't be paid until, 35 years in advance. And long story short, a lot of people in Germany lost their pensions over what happened this weekend. Thousands, tens of thousands of Germans who are at retirement age or who are already retired lost their pensions. Now, think about that in terms of what it would mean to you and people that you know if suddenly they didn't have the pension that they worked and earned and entrusted to their employers. The kind of thing that happens when you have a default by a very, very major bank player that, despite being solvent, is not liquid. What happened this past weekend is going to have reverberations for a long time to come. But the most immediate impact is going to be political, as those who have lost their pensions because of this and people who have suffered other irremediable harm as a result of it come back on the state, either politically or commercially, demanding satisfaction of the debt that these organizations owe them. We already have the claims against these organizations. The American Bar Association owns a very large proportion of the Fortune 500 companies and the banks, the British maritime banks that you're all familiar with and that you've been doing business with for years. The American Bar Association and an organization known as the Northern Trust is very much involved in the middle of all of this chicanery involving pensions and future obligations resulting from pensions and what are called social insurance programs like Social Security in America. The failure to meet the silver margin call is just kind of the beginning of a potential upset in funds which are dependent on not only liquidity, but on deliverability of actual commodity assets, not just trading contracts on physical assets that are assumed to exist and assumed to be available.